Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 BMO Global Metals and Mining and Critical Minerals Conference in Hollywood in Florida. Gold may be getting all the headlines, but exciting things are happening in the base metals too. Joining me to discuss this is Shaun Usmar, CEO of Vale Base Metals. Shaun, welcome to Kitco.
It's good to see you again.
Now, let's start off with some basics. Vale Base Metals is a private company. What is it and what's your brief there?
I describe it as one of the best kept secrets, I think, in the battery metals or critical mineral space. It's mostly polymetallic nickel business, a lot of it derived from the former Enco portfolio. And of course, a big copper endowment, including Salobo, Sossego in Para in the Carajás in Brazil, with more than 30 years worth of reserves and resources, actually the largest copper position in Brazil.
Well, I want to sort of talk a little bit more about copper because you have extensive land holdings in the Carajás region of Para, Brazil, which is Brazil's copper heartland, if we can phrase it like that. And that obviously includes some of the most prospective copper terrain. I spoke with your chair, Mark Cutifani, at the end of last year, and he spoke of the potential to double your copper production to about 700,000 tonnes per year by 2035. What's your plan to get there?
Yeah, so it's very much along those lines. So I think the first opportunity for us is really getting our cost structure and our productivities right. And the work that Mark had started with the asset review work that you would have heard about last year, we're really building on that, making sure that we can get our portfolio as efficient. And you would have seen our recent results. Salobo, for example, has just hit its best output in its history. There's more opportunity beyond that. Sossego, we're hitting more productivity, but we've got this endowment with projects that in some cases have been around for 20 years. And so the real focus for us is just to execute. Those numbers you've mentioned are still valid. I think the opportunity for us is to make sure we can make the most of what we have with our organic pipeline, unlock that. And you would have seen the Nuevo Carajás initiative that Gustavo Pimentas announced just a week or so ago, really to try and look at leveraging the infrastructure and the synergies that exist there, and to see how we can partner better with government and our stakeholders to unlock that growth. So those numbers are there, but this is about delivery. And I'm really pleased with what I'm seeing in the business in the short term. You see it in our results already.
Now, Vale Base Metals has been spun out of Vale. There's a big diversified Brazilian company. Was part of that the reason for the spin out to give the copper assets the freedom, if you like, to achieve their potential? Because I imagine within Vale, where iron ore predominates, iron ore is the start, the middle and the end of any conversation and capital allocation decision. Was that the main reason for separating the assets?
I think so. After nearly 2 decades, I think they had the foresight to have a look and see that not only have they got an incredible and very successful iron ore business, so much potential beyond that. And you can understand when you've got a localized critical mass business of that nature, how when you're allocating capital in a business that has a smaller scale, more complexity, vertically integrated and globally diverse, having focus on this really is an opportunity to unlock that value potential. So they had the foresight to do that, to do the spin out, to both realize the value potential from nickel and copper. It's also a multiple game, right? I mean, even if Vale takes its current multiple and moves it up to, say, a BHP or a Rio type multiple, if we're successful in delivering the potential in our portfolio, which we're obviously setting about doing, the multiple should be more like double. So I think they'd identified not only the net asset value and the optionality potential in the portfolio, but really the multiple potential that we can unlock.
What is the relationship between Vale and Vale Base Metals today?
There's clearly synergy. They're our controlling shareholder, so it's a very close relationship. We're 90% held through Vale SA, 10% through Manara, who invested just over a year ago, and that's the nature of the relationship. It's a very close one. It's symbiotic. I have a board with Mark Cutifani as chair, where Vale have representatives in order to facilitate governance and that carve out and that connectivity into Vale SA.
In terms of financing, do you have your own separate financing, access to finance, etc., or are you sort of financially dependent on the parent company?
Yeah, so I think like any organization, the question at the end of the day is how do you unlock, firstly, generate sufficient cash flow in order to make sure that you can fund your pipeline. And, if you are looking for additional capital, can you present things that are high enough in terms of quality and return that you're then going back to your shareholders to do that? So our plans currently are set up, and the ones that you've just talked about, for example, in copper, are really structured in a way that we're self-funding. We have debt facilities, we're driving down our cost positions, improving our cash cost positions to ensure that we are self-funding. I think the opportunity and the challenge that I face with our team is to see what we can do to go beyond that, to be able to actually unlock more of the mineral endowment more quickly, and then be able to sort of present those high-class problems to our investors to say, actually, perhaps we need more investment on a more accelerated timeline. That's not part of our current outlook, but that's part of the ambition, I think, that lies ahead.
Now, Shaun, you're a metallurgist by trade. You came in as CEO, I believe, October last year?
Yeah.
Okay. And your background, Xstrata, Barrick Gold, Triple Flag, you've got a lot of experience in public companies in different metals. What's the vision you're bringing to Vale Base Metals? Again, bearing in mind that Vale Base Metals has come out of Vale, which has perhaps had a very singular mindset focused on iron ore throughout its history.
It's a really interesting one because the businesses, as you mentioned, once I moved away from operations, it was in M&A, so Billiton, BHP Billiton, making that combination and the integration work. I joined MEC early on with Xstrata, where we grew mostly inorganically through M&A until we did the deal with Glencore nearly a decade later. Barrick was a turnaround story, focusing at a time when gold was $10.50, very different from now, to make cash and repair that balance sheet as CFO. And Triple Flag was about building a business where you had no assets to what is now a $3.5 billion US market cap business. This is about taking an endowment that is underappreciated. I think it's not only the ability to take that endowment, get the cost structure and the productivities right so that you can unlock that endowment, but then also to be able to enable the multiple and the potential. I think it's an incredible platform. So I view it in many ways that all those experiences that I had previously have probably led me to this moment where I think I have something to contribute to Vale Base Metals, to its shareholders, and to this team to be able to take it on that journey and to see, can we actually create a new critical minerals or battery metals business once we've gone through the potential of that portfolio in the years to come. I think there's more ambition that lies ahead, but we first have to deliver on our potential.
Now, Vale Base Metals is currently private. We are here at the BMO Metals and Mining Conference. I imagine there are many people here who would like to potentially invest in the company. What are the conditions under which the company's owners will greenlight an IPO?
Look, I think those are questions that will happen empirically as time goes on. The first thing we have to do, and which we're active on, we've materially lowered the overhead in the business. We're setting it up for greater accountability and agility, and that will really create the conditions so that we can then actually be faced with what's the right portfolio for this business. So we've announced, for example, a strategic review on Thompson. Are there other partners or owners who may be better placed to unlock that potential? I think our history has been one with a very vast portfolio where we try to do everything ourselves. And I really like the idea of are there partnerships, are there assets which perhaps are not the right assets for our portfolio going forward, which are maybe better assets for others in their portfolio. And so at that point we can maximize our cash flow per share and our value per share for the business and for our owners, and then move on to that point. We've already had, it's my first day, but a number of groups talking to us about potential partnerships and JVs. And I welcome that. I think that's exactly the sort of mindset that will help us to make the most of this endowment. So we're actively looking for those opportunities. Get the cost structure and productivities right, optimize the portfolio, and see what the right way is to do that, potentially with partnerships.
Thank you. I'd like to talk a little bit more about the copper sector in general, if I may. Copper companies seem to be sort of quite cautious about greenfield developments at the moment in time as development costs continue to increase, pushing capital intensity to an average of $23,000 per tonne, depending on whose figures you look at. And the incentive price, the copper price, does not seem to be eliciting much of a producer response. What's your view on where we are in the copper sector at the moment?
Look, I think the first thing is the copper story for the longest time has been one of steady demand and really ongoing disappointment on both capital and timing overruns when it comes to greenfield supply and brownfields. So, I think when I look at our endowment right now, I mentioned our recent results are starting to show sort of real traction with our existing operating base. Something like Salobo, for example, is open in every direction and it's got decades of mine life ahead of it. We have to find ways. We've just pretty much delivered Salobo 3. There's opportunity for coarse particle flotation, Salobo 3.5, and an expansion beyond that. You have to do those things, right? Those are high return, obvious opportunities that we'll pursue. But those regional plays, which is really this opportunity we were talking about previously, the capital intensity, we have infrastructure. Vale has been operating in that region since 1985. And so the focus, even though our businesses are making really strong double-digit returns in the copper space right now, generating strong cash flow, we really have to make sure that we can be as lean and as effective as we can in our execution so that we can better enable those projects. So for example, our next cab off the rank, which is part of that regional play with Sossego, those are, the capital intensity is roughly half of what you've just mentioned. And so it's incumbent upon us to be able to actually deliver those things, to work with our partners and to deliver those things.
Now, in terms of the sort of broader environment, the broader trade agenda is dominated by geopolitical conflict, tariffs and so on, and of course the new factor, US President Donald Trump and his views on the critical metals, which seem to be positive for some things, not so positive for other. To what impact is this impacting your decision making and planning going forward?
Look, as you'd imagine in this environment, so firstly with a Canadian nickel operating base, we supply the majority of the nickel into the US defense and aerospace sector, for example. We are friends, and my priority in the short term is to make sure that we can deliver successfully and help our US customer base. We provide high purity nickel into that market. The Canadian supply side provides the bulk of that, and next would be Norway at say 9%, where we're over 50%. So just to put this into context, because we have a geographically dispersed production base and vertically integrated asset base, we have some degrees of freedom both commercially and operationally to be able to provide ourselves with greater agility. I can't affect geopolitics. What I can affect is making sure that our portfolio is flexible and as resilient as it can be, and that's the focus.
Okay. Now, obviously the nickel market, nickel prices, came down quite severely a year or so ago. They've recovered a little bit, but they're not great yet. So how does that impact your planning? Are there actions you can take to sort of minimize the impact of the pricing environment on your nickel unit, make it become more competitive? Or does the fact that the nickel prices are where they are mean you sort of focus even more on your copper unit and look to squeeze the benefit from that?
I think you have to do both. So we've got a legacy of some underinvestment in our nickel endowments, and the focus has been on improving the utilization, availability of our existing infrastructure there, filling the mill, for example, in Sudbury. We've seen just in 1 year in Creighton Mine, for example, a doubling of our development rates. These are things we should be doing to unlock value and bring ourselves into that lower half of the cost curve, which is where we have the mineral endowment to be in that area. And that's the right way to compete with a shorter term oversupply that we're seeing coming out of Indonesia and a lot of investment with China. So that's the focus, right? To get the portfolio right and make sure that you can actually deliver into that. I also argue, because I lived this, I came to Canada in 2006 when we took over Falconbridge as CFO of Xstrata Nickel. When nickel was nearly $25 a pound, trying to get people to be disciplined on cost and capital was very difficult in that environment. And then when the global financial crisis hit, you could make change happen. I argue this is the right environment to set the business up now with the right sort of cost and capital discipline for the future. And that's really what we're setting about doing.
I would imagine that being a private company at this moment in time is beneficial from that point of view, because it enables you to undertake these things without necessarily all the pressures of being a public company coming down on top of you.
We still have those pressures indirectly. We'll, leaving this straight into present with some investors with Vale, as you'd expect. And so we have public company requirements as part of this, but that's my first year in the numbers. I haven't had to present at BMO as a listed company. And I think the discipline that comes with running a private business as if it's public is a useful one. It just means that you can take a longer term view, which is what we're doing.
Okay, let's end with a forward-looking statement, if I may. What are some of the milestones that we can expect to see from Vale Base Metals this year, and where do you want the company to be by year end? So
the first thing is we've just had the first year in a long time where we've delivered into our guidance in both copper and nickel. We're demonstrating growth. We've got a ramp up at Onça Puma, doing Furnace 2 this year. We've got the VBME, Voisey's Bay expansion, with the underground mine extension that we just finished the 2.94 billion. That has got to ramp up through 2026, so there's a big focus on that. All of this dilutes our fixed costs in nickel, as you'd appreciate. And in the meantime, we've lowered our overhead, and we're on a run rate of nearly a third, and that's a nearly $200 million a year cost improvement. But the main thing is setting the business up with a high level of ownership and agility. So we need to continue to deliver on our promises, unlock that copper growth, and prioritize that as priorities 1, 2, and 3 for the business, and make sure that at the end of this we're really set up with the right nickel portfolio and on a track to deliver our copper potential.
Well, I wish you the best of luck with that. Shaun Usmar, thank you very much for joining us today.
Great to see you, Paul. Thank you.
And we have a lot more to come from the 2025 BMO Metals Mining and Critical Minerals Conference here in Hollywood in Florida. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.